I would like to introduce Dr. Don Hamson, Managing Director of Plato Investment Management. Thank you, Don. Please go ahead.
Thanks, Ali, and welcome shareholders. You should have been sent a presentation with this, so I'll be running through that presentation and pointing out the pages. The all-important disclaimer, of course, is on page 2, so you should read that. But today, we'll be talking about the investment strategy, a market update, but importantly, an entitlement offer that is currently active for PL8 or Plato Income Maximiser, and I'll probably call it as PL8 to be simple. And there'll be time for questions at the end of my discussion. So moving to investment strategy and performance, and straight to page 5 really, it was a pretty good year actually. The market or the portfolio was up 15%. This is the underlying portfolio after fees and costs, versus an index. The tax-exempt index was up 13.4%, so this is an index that includes franking credits, and so we had an active return of 1.6% for the year, and importantly, very strong dividend generation. And since inception, we're basically trading in line with the market. So we had a little bit of underperformance last year, and we've got that back this year, which has been good because it has been, for the average fund manager, a pretty tough year. I will also note that the underlying investments of the PL8 is actually the Plato Australian Shares Income Fund, so PL8 actually invests in that, and if you look at the longer-term track record of that fund, which is on slide 6, it has been a good long-term, and this is an after-fee number, outperformer of the tax-exempt index, including franking. So, that strategy's been going now for almost 8 years, even though PL8's only just had its second full financial year. In terms of dividends, on slide 7, it was actually a strong year. PL8 paid 12 half-a-cent fully franked dividends. That equates essentially to a realised yield of around 5.8% on a cash basis, and with about 2.5% franking. So that's just over that 8% gross yield. And of course, one of the objectives of the fund is not only to outperform the market, but also to provide higher income than the market. The market generated around a 6% gross yield, so we certainly ticked those boxes in the last financial year. And that is on our normal dividends, because in addition to those 12 ordinary dividends of half a cent a share, PL8 also paid a 3-cent special dividend in May to investors who were on the record date in May. And if you turn to slide 8, you can actually see that boosted the realised yield for those investors that held the company for the whole year above 12%. It is a special dividend, and I would note to investors they don't necessarily expect that every year, but if you were an investor for the full year, you would have got that 12% sort of gross yield. And just to highlight on slide 9 the consistency of the ordinary dividends, we don't even include the 3-cent special here, but you can see that PL8, once it started paying monthly dividends in October 17, has paid a continuous stream of monthly dividends. That was increased in April of last year to half a cent a share, and has been half a cent a share ever since, all fully franked. And we are the only listed investment company in Australia that pays monthly fully franked dividends, which is very important, I think, in the current environment where we have record low interest rates. From an NTA perspective, on slide 10, you can see that we slightly lifted the NTA. The NTA was increased through dividends received. The company expenses were fairly minor. We did pay 9 cents in dividends, which means there was a slight rise in the pre-tax NTA. I would note that the NTA, whether it's pre or post-tax, does not include franking credits, and so there was over 1.5 cents of franking credits. There's 1.5 cents of franking credits in the NTA right now, and there's more than that. At the end of June, it was about 1.7 or 1.8 cents of franking credits, so which I think most investors find very important. Indeed, if we look at how the share price has traded versus NTA on slide 11, I'm pleased to say that post the election results in May, which were obviously somewhat of a surprise, I think, for most people in Australia, but we've actually now, PL8 has resumed trading at a premium to NTA. We've drawn two red lines on slide 11. So this slide tracks the price versus the disclosed NTA. A couple of things to note. One is that during the year, around November or October, November, we moved from announcing our NTA on a monthly basis to on a weekly basis, and so you can see that we've updated the NTA more frequently. The company is currently looking at whether we can move to an even more frequent announcement of NTA, and hopefully that will occur later in the year. The two red lines represent, excuse me, first one, when the ALP announced their policy to potentially stop the refunding of franking credits to certain investors, and the second red line, vertical red line, represents when the election result came out. And I think you can probably see the pattern there that, generally speaking, the share price, which is a dark blue line, was largely traded above the reported NTA, both prior and post the red lines. But between the two red lines, when there was the threat, I suppose, of the likely stopping of refunding franking credits to certain investors, such as self-managed super funds in pension phase, that did tend to drag down the NTA of PL8, but post the election, happy to say that we've moved back to a premium. And generally speaking, there aren't too many LICs at the moment that are trading at a premium to NTA, so we're quite happy that we remain trading at a premium to disclosed NTA. Now, I mean, that's largely the update. It has been a very good year. I mean, if we go through formal numbers, we actually, because of the extraordinary level of dividends that we saw in the Australian marketplace, we actually had an 81% increase in reported profit for the year, which generally reflected a significant increase in the dividends received. But we focus more on dividends paid out, I suppose. I just wanted to go through the entitlement offer on slide 13 for anyone who wasn't aware of it or may have, not fully understand it. This is live at the moment. The offer's open and actually closes on Friday, the 30th of August this week. So if anybody is thinking about participating, they need to move into action pretty quickly. The offer is three-tiered, really. It's a new share for every 1.6 existing shares for existing shareholders who are on the record date at 13th of October, which actually meant August, of this year, which meant you actually needed to have purchased it the previous Friday. So if you were on the record date, own shares on the record date of 13th of August, you are eligible for the entitlement offer. But that is only the first tier. We don't expect all shareholders to take up their entitlement, and so if there are leftovers, if you like, if some current shareholders don't take up their entitlement offer, all existing shareholders are able to really bid into the oversubscription facility, and there's no limit as to what they may bid. So, and indeed, you should have BPay details to either A, take up the entitlement offer, or indeed to overbid for shares if you want more than your entitlement. And there's also a third stage to the offer, and that is we have a shortfall offer for new investors, because we would be quite happy to see more investors coming to PL8 to broaden the shareholder base and increase liquidity. If the offer goes off, at the upper end, if all shares were taken up through those three sort of tiers of the offer, we would raise up to $204 million worth of capital at an offer price of $1.10. When we announced the offer, the shares were actually trading at about $1.19, so it's attractive relative to that. And even today, we're trading slightly above that offer price at $1.11. So, as I mentioned, the offer closed on 30th of August. Those who are bidding into the entitlement offer itself will know the results on the 3rd of September, and those investors or new investors going through the shortfall offer will know their outcome on the 10th of September. Entitlement shares will actually trade on the 9th of September, and shortfall shares will trade on the 13th of September. The highlights of the offer are contained on slide 14. Interestingly, there'll be no waiting. New investors that participate in this offer, whether they go through the entitlement or new investors like the shortfall offer, they will all receive the September dividend, because the September dividend goes ex after the shares would have listed. The benefits of the offer are not only do new shareholders immediately get that 0.5% fully franked dividend, which has already been declared by directors, but because we will raise some capital, we don't know how much, but the greater size we expect to increase liquidity. It will also reduce the fixed costs. There are certain fixed costs such as directors' fees associated with running a listed investment company, and greater size means there will be economies of scale which will reduce the MER. I mean, if we were successful at the upper end, we estimate there will be a reduction of around 5 basis points or 0.05% in the management expense ratio. Investors should know that all the costs of the offer are being paid by Plato Investment Management Limited, which is the manager of PL8. There will be no costs borne by PL8 or shareholders of PL8 themselves, so all costs are paid by the manager. We expect this to probably be the last time that we do a secondary issue given capacity constraints of the underlying investment. So we believe it's a good opportunity for new investors or even investors that want to top up to access liquidity, and particularly given the current market environment, and we'll now move to the market environment. I've already mentioned it briefly, but if we move to slide 16, we live in a funny world because we now have record low interest rates in Australia of 1%, and the market expectation is that interest rates are likely to head towards 0.5% here in Australia over the next 12 months. A number of noted economists have been predicting interest rates will fall to 0.5%, including one I worked with and had a lot of admiration for, respect for, is Bill Evans at Westpac, and he's now calling for interest rates to move to 0.5%. And even in the last week or so, we see Deutsche are actually predicting, this is only their forecast or their expectation, but they are talking about interest rates potentially moving to 0.25% here in Australia, which is, unheard of. At the same time, bond yields, so Australian Commonwealth government bonds out to 10 years all trade at a yield to maturity of less than 1%. You can invest in a 10-year Australian Commonwealth bond and you will currently receive less than 1% per annum for the next 10 years. And it's extraordinary times, and I know for retirees this makes it very difficult, because if you're living off term deposits or anything linked to cash or bond yields, 1% doesn't generate a great retirement. And even things like income securities or anything linked to bank bill rates have fallen around 1% already this year, 2019, calendar 2019. That makes a significant reduction to the income that retirees or people living off the earnings of their investments. So very tough environment for people who invest in cash and bonds. But I'm happy to say, and this is on a longer term chart on slide 17, that the yield on Australian equities is still trading around the sort of 6-ish mark when you gross up for franking. So when you look at the yield on the ASX 200 or 300 or all index, they're all around the same. That yield has been remarkably stable at around 6% on a gross of franking basis for the last 25 years. And the gap now between cash rates, and we only update this chart on slide 17 at the end of each year, but the difference between cash rates, what you can earn on cash and what you can earn on the Australian equity market is chalk and cheese. I mean, it might be a simple metric, but if you're only earning 1% on your cash or your bond, that effectively equates to a price earnings ratio of 100. Whereas the equity market price earnings ratio, especially with the earnings of companies, is around 16 times. So quite different. To me, the expensive asset is certainly cash. We're also pleased with the performance of PL8, particularly, and as a bit of an indication of that on slide 18, is we are an income strategy and we do invest in the banks and Telstra from time to time, but the performance of PL8 has been substantially better than the performance of the banks and Telstra. We're looking at the price performance since the listing of PL8. And it's consistent with our view that a diversified portfolio of income stocks can perform very well, and investors will be better off in a diversified portfolio than just picking out a one bank or Telstra, etc. And it has been a tough time for the banks and Telstra. Clearly, the banks have been weighed down by Royal Commission costs and fees for no service, etc. And Telstra itself has its own issues with the NBN, and Telstra has now cut, in the latest results, it's now cut its dividends 48% from when we first listed from 2 years ago. So it's been a tough time for those investors. But as I mentioned before, on the flip side, actually the last 12 months, and this is slide 19, has been a very, very, we call it a dividend bonanza in Australia. I mean, it's why PL8 actually had record earnings and was able to pay a special dividend, or part of the reason for the special dividend was in fact the potential of the ALP policy. But in the last, in the financial year that we've just finished, it was a record year for PL8. It was a record year, in fact, for the underlying Australian Share Income Fund that's been going for 8 years in terms of dividend generation. Whilst the banks and Telstra most of the banks have maintained their dividends, NAB has cut it and Telstra has cut their dividends. We've seen massive dividend opportunities out of the resources sector, special dividends, buybacks, just increased ordinary dividends from the likes of Illumina, Fortescue, Rio, big buybacks from BHP and Rio. Some of those extraordinary dividends were due to the ALP franking credit policy, so we think that impetus has now gone away post the election, so we won't see anywhere near such a record year this year. But we're still seeing some pretty good dividends already this reporting season from the likes of Rio, which paid $1 billion special, and BHP confirmed its largest ever annual dividend. So that's pretty much all we wanted to update investors with, and I think now we'll hand over to Ali for potential for questions from investors.
Hi Don, thanks for taking the question. Just a quick one. Wanted to know if you see opportunities, what opportunities you see with the $200 million raise that you're doing from the entitlement offer.
Well, I mean, in terms of opportunities to invest, there are, PL8's a very small investor in the market, so there are plenty of good opportunities. It's interesting that I mentioned before Rio's just done a good special dividend. Obviously, that's passed, but it's not. There are still plenty of good dividend-paying companies in Australia. It's interesting. We've also seen a couple of buybacks recently announced just in the last week or so from the likes of Qantas and Macmillan Shakespeare, which are both in the portfolio. So there are plenty of opportunities for us to invest that money. On the flip side, one of the opportunities of getting extra capital into the company I mentioned before was that we expect it'll improve the liquidity of how PL8 trades, but also will reduce the MER. So that's some other opportunities for investors.
Hi Don, hope well. What is a reasonable expectation for the yield on the ASX 200 in the year ahead, and how much do you think PL8 could beat that?
Yeah, so our expectation is it'll probably be just a little bit, a tiny bit under the 6% growth that we've seen historically. The market has risen a bit in the first half of this calendar year, which does reduce the yield a little bit. On the other hand, some companies are increasing dividends. So it'll be close to that, but probably just under 6% growth. Look, our experience with the underlying investments from PL8 is that we can generate around 3% higher than that. The question, the PL8 itself, what it pays out will be a question for directors, and I am actually one of the directors of the company. Currently, the dividends, first three dividends for this financial year have already been announced at ½ cent a share. Directors have to consider whether we continue to pay at that level or whether we might increase, or whether we do a small special this year. But that would, specials are special, so I wouldn't bank on that. But I think the underlying investments should still be able to generate about 3% more than that, which would put it around 9%, maybe just under the 9% mark. Okay, well, if there's no more questions, then I think we'll just finish up. But just a reminder that anyone who is interested in participating in this entitlement offer, that the offer closes on Friday, 30th of August. It's this Friday, and so you need to get your money ready and apply for those shares, whether it be through BPay if you're an existing shareholder, or through broker if you're a potential new shareholder. So thanks, investors, for listening.